Welcome to Markets Now. I'm Michelle Rook with Beadle of Paradigm Futures. Livestock futures, we were lower in hogs, mixed to higher in the cattle, and then we had a lower day in the grains. And let's start off there, Kent, talking about the grains in sum total. Felt kind of like a risk-off day with some of the outside market influences, right?
Yeah, we had new highs for the move in the U.S. dollar back above 103. It's been quite some time since we've been that firm. We've been on quite a run in the dollar, actually. I think we've now been up 9 of the past 10 sessions. And, strength in outside economic markets have a lot to do with that. We had a strong jobs report. We had a stronger than expected CPI. We've seen interest rates go from, somewhere in the neighborhood of 3.7, 3.8 on the 10-year to right around 4.1% now. That's a pretty good move, and it obviously the higher interest rates have brought some purchases back into the U.S. dollar, which tends to weigh on commodities, all things being equal.
Yeah, and obviously there's parts of the market in the grains that are removing weather premium. Let's talk about South America first. Was that an influence, some of these forecasted rains, either on corn or soybeans, and some of the pressure we saw there?
Yeah, we've been watching, this correction in soybeans now ongoing for the better part of 2 weeks, and with another dime follow through here today. We've been seeing in those forecasts better than expected chances of rainfall. Some of the anomalies have, shifted to being wetter than normal. And the market's is trading that and has been trading that, but I have to say that the results to date, I don't believe are, quite as good as what have been in the forecast. And I do think that's something that the market's going to have to start paying attention to. Brazilian planting progress, was 2% a week ago Friday. Here this past Friday, it had climbed in Mato Grosso to 8.9%. That's less than 7% in a week in a province where they're supposed to be able to plant at least 15% in a week. Less than half of what they can do tells me that the Brazilian farmer's not all that happy with the rainfall situation as of yet.
Yeah, and we did close with November soybeans below the $10 mark. There's another area of support, though, that you're watching on the charts that kind of needs to hold here, right?
Yeah, we'd like to see the 995 hold. And of course, we closed right on top of that, settling at 996. 995 was the bottom part of the consolidation on the way up, where we had traded for about 2.5 weeks between 995 and 1031. To be honest, I'd like to see it hold. I'm not sure that it will. Again, with the back half of harvest pressure coming at us, we'll have to see if it can hold. I like the fact that soybean meal closed the day higher. But right. We're getting some pressure from the energy markets, and crude oil is down here again today. There's a lot of expectation that Israel was going to take out Iranian oil production, and that has yet to happen and may not happen. Current Biden administration is lobbying pretty hard for that not to happen. Some of the other Middle Eastern countries are lobbying Israel pretty hard for that not to happen as well, because they're worried about Iranian proxies retaliating against production in places like Saudi Arabia and the United Arab Emirates.
Yeah. So you think that lower crude oil market was why corn was down so hard, not necessarily the uptick in harvest pressure?
I think that it had an impact, and of course, with lower energy prices, you do have generally lower ethanol margins. We've seen ethanol margins contract here over the last 2 or 3 weeks, and it hasn't necessarily led to lower ethanol production as of yet, but it probably had an impact on the corn market today. Just felt like a commodity-wide risk-off trading day.
Okay. Let's talk about technicals there. Are we holding support areas that we need to, including like the 50-day moving average is one I know you watch?
Yeah, I do watch the 50-day, and we closed right on top of it at 408 and a quarter. So, I'd like to see that hold. Once again, going into the last half of harvest, I'm not sure that it will. I do think that the large speculator who's covered an awful large portion of their short position probably has started selling at the end of this past week and into this week, just trying to position themselves ahead of farmer selling that, is likely to come here on the last half of harvest, which we're, quickly going to be getting into.
Yeah, you and I have talked a lot about all of the short position that the funds have covered, all of their massive short position.
Yep.
Are they in probably a line to start selling again? Will they go back shorter, do you think?
Yeah, I think they will get a little shorter here again. Generally, they don't move in one straight line, and they've covered easily 2/3, if not 75% of their entire short position. And I do think that some of the shift in the net was that we did add some new longs here on this move higher, and because the fund isn't one fund, but it's obviously a conglomeration of many different funds, and some of them have gotten long, and some of them have moved to take profits when the corn market challenged the 100 and 200-day moving averages here early this past week, and did not get through those levels. And so profit taking from that sector, farmer selling as well, but I think that the large speculator is probably doing a little bit of selling here right now.
Yeah, is that true in the wheat market as well? Because we did see some double-digit losses. I mean, did we run up into some chart resistance there?
Yeah,
And or is that removing weather premium with these forecasted rains for the Southern Plains?
Yeah, some from column A and some from column B. To be honest with you, we're putting rainfall into the Southern Plains for this weekend. Looks like Western Kansas is going to get a fair amount of rain, as well as Texas, Oklahoma panhandles. Those are areas that have gotten pretty dry again. We're not ahead of the game at all on planting progress because it has been so dry. I think the farmers are going to want to see that rainfall. And so we took a little bit of weather premium out of the market. Last week on the rally, when we peaked out, we had run into the 100-day and in some cases the 200-day moving averages, and found some willing sellers there as well. Again, as with the corn, we'd seen some new longs in the wheat market, and I think we saw some profit taking, and that leaves the shorts and probably some new shorts coming in here as of late, especially with the rainfall and the forecast we have today.
Yeah. So live cattle futures, we ended mostly higher except for October there. And of course, there's been a lot made about the reversal that we put in on Friday, making new highs for the move. Then we ended lower. Mm-hmm. Do you think today's action negated that, or what were you watching?
Yeah, I mean, if you wanted to put much stock in that reversal, today's price action with a lower low and then rallying again to close higher, that's actually a reversal higher. And so it absolutely would negate the reversal lower that we had on Friday. When I'm focusing on cattle right now, I'm thinking a little bit about the bigger moves, and we're coming out of another fairly sizable correction. We've had two very sizable corrections in the last 6 or 7 months. In both cases, it came because the markets were overbought, because hedging margins were, spectacular for producers who wanted to step up and lock in cattle crush margins. And so we had some corrective activity. I think that we're a little too soon out of that corrective activity. I actually believe that the fundamentals under cattle are still reasonably strong, and I honestly believe we're going to make some higher highs before this run is over.
Well, if cash is indeed part of that, we were up another 32 cents last week, 5th week that we've had higher cash trade. Are we going to make it 6?
That would be my guess. Yeah, if I had to call cash this week, it's probably $1 higher.
Gotcha. And we talk about markets that are overbought. Let's talk about hogs. That's kind of the case there. We've run up into some chart resistance, maybe seeing a little profit taking, you think?
Yeah, near our old contract highs in the hogs. And, unlike the cattle, which I don't think is really overbought quite yet, the hogs have been up either 8 of the last 9 weeks or 9 straight weeks, depending on the contract you want to look at. I also don't think that the hogs have quite the amount of fundamental support that the cattle have. I do think that hogs have come along with the cattle because of the sizable discount and the inexpensive value that pork provides to the consumer these days. But we've come an awful long ways in the pork market. We've made new highs in the hog crush margins last week. We're providing hog producers with an opportunity to get some hedges on again and lock down some profitability in a market where it was difficult to make a profit much of last year. And I think today probably was the beginning of some fairly good hedge selling from the integrated hog producer.
No, hedge selling makes sense. That's a good point you make there. All right. Thanks so much. As always, Kent Beadle with Paradigm Futures. That is Markets Now.